Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to State of the Economy podcast. I'm your host, Jyoti Banthia, and today we'll talk about the M&A transactions in India. The M&A transactions in India has actually seen a spurt over the past few years. This comes at a time when in 2022, the M&A deals touched record high deal volumes as nearly 20 deals were completed, accounting for about $112 billion. Domestic M&A transactions dominated with a total of 355 deals, while outbound transactions aggregated for about 61 deals. In 2023, the M&A activity is expected to remain strong, even as there are global headwinds from rising interest rate, elevated inflation levels, leading to increased margin pressure for companies. Strategic M&A in India is expected to remain resilient, backed by continued strong domestic demand and healthy balance sheets, while PE activity may rebound, backed by better valuation, resulting in higher deployments. With me to discuss the same, we have Nandini Chopra, Managing Director at Alvarez Marsal, and Bharat Anand, Partner at Khaitan Co. The first question to Nandini: can you please explain how M&A consolidations have surged in the recent years, and what are the factors that contributed to this surge?
Thank you, Jyoti. Yeah, so I think we have seen a relentless surge post-COVID recovery from 2021 onwards. And the deals, I will refer to closed deals while I speak and not just announced deals. I think closed deals went from $54 billion to nearly 120 to 143 as we speak in the 9 months in calendar 2023. Of course, caveated by the fact that about 68 of that 143 is the HDFC Bank consolidation, which I think will be just closed in July this year. So, but the reason really is the pent-up dry powder post-COVID from private equity, and that explains the surge in inbound transactions. The IPO markets still haven't bounced back to the 2021 levels. It remains muted, and as a result, a lot of the capital requirements are being put up by private equity. Valuations have also been muted, except, of course, every time the markets surge, we see a kind of a tipping point with valuations becoming so high that, again, peaks kind of pull back, and we keep seeing that cycle over and over again. And largely, I think the China Plus One story is playing out and will continue to play out with a lot of FDI investments coming into India.
Bharat, if you could please weigh in.
No, I completely agree. I think, on the buy side, the M&A decision is really driven by your confidence. And it seems that, India is on the upswing as investors are more confident about whichever sector they operate in, if India being core to that sector, or if they're already in. Several strategics are looking at doubling down on that. So yeah, all in all, M&A activity has done well.
Absolutely. But how has the landscape of the mergers and acquisition changed in the recent years? And which industries have had the most active participation in it? And for the second half of the remaining 2023 calendar year, what are the trends that you are noticing at the current moment? Bharat, if you could please go first.
Sure. I think the sectors in India that have witnessed significant M&A are clearly healthcare, pharma. Obviously, that has the existence of venture capital, private equity money in these sectors has provided a huge boost to transaction activity taking place because of the thirst for exit. But also sectors like auto, IT have seen a fair bit of M&A activity take place, and deal count for these sectors has been way above what has been normal trends, historically recorded for these sectors. That's been certainly our experience in terms of the sort of the year gone by to date. And expectations are that these sectors will continue to see increasing activity. What's interesting is that you've seen the advent of Indian strategics looking at consolidation, and you've also seen in some cases foreign sellers exit India for some reason towards Indian strategics who are looking at consolidating and actually growing in terms of Indian market share. So some interesting trends there, and it'll be interesting to see how some of these trends bear out in the future.
I think I agree with Bharat. I think in terms of the sector themes, healthcare life sciences has been huge. It's value accretive. I think the underlying demographics and the economics of these two sectors, healthcare and life sciences, kind of, don't go away and probably won't go away for a long time. So I think both private equity and strategic investors are well invested. We are, however, seeing some trends where as promoters and founders, entrepreneurs are aging, there is a handover. So you're seeing the entire noise around, let's say, a Cipla, and these will lead to larger transactions. We're seeing, you'll be hearing about, family splits, and these are just advent of time. So you saw the Godrej family split being announced. So I think these kind of will continue to form large themes for domestic M&A. There are some large groups who've been leading consolidations. Earlier, I think till last year, it was largely Adani. They were raising money for their green businesses. They went out and diversified in cement with the Ambuja deal. They continue to consolidate, acquired Sanghi. So I think, of course, there's been a slowdown at Adani, but Reliance, I think if you look at the deal tables, Reliance is right on top with some of the largest transactions. So last year, I think a lot of the 5G spectrum deals kind of led by Jio itself was huge. This year is I think the demerger of the Jio financial services businesses, the serial raises for Reliance Retail. So some of these big groups continue to remain strong and are magnets for large global private equity and sovereign fund investments. So some of these themes we will continue to see. I also see a lot of deal activity in renewables and green energy, and I think this is only going to grow. In addition to healthcare, life sciences, and IT tech, I think renewables is a big place. We saw Renew Power, Maitra, Vada, Tata Renewables, all of them either exchanging cap table shareholders or raising new money. JSW acquiring Maitra. So I think these are, and that's more than $10 billion of transactions in just renewables alone. We saw financial services kind of really get right up on top of the league table for merge, and I'm quoting merger market really, and that's led by the HDFC consolidation, the IDFC Bank consolidation. I think Axis acquiring Citi, and as Bharat said, Citi decided to exit their consumer business. So Axis Bank acquiring the Citi business, Bandhan looking at IDFC, AMC. I think very interesting trends. And we're going to continue seeing some of that tailwinds as we close 2023.
And I maybe just weigh in, Jyoti, if I may, on Nandini's comments that, sometimes it gets very attractive to look at the peak of the pinnacle and the largest deal and the billions, just sort of glow in front of one's eyes. But look at, 2000 plus deals, happening in India, that's not a small number. And given where the economy is and the trend of people to say that, look, we're not just simply going to rely on organic growth, but look at inorganic opportunities, just means that, some of that animal spirits that people were speaking of hopefully get unleashed across each tier of economic activity segmentation. So I think good news from that standpoint.
Absolutely. How has the startup space taken in M&As and in the recent times? Because, correct me if I'm wrong, because a lot of consolidation is now actually happening in the startup sector, whether it is edtechs or fintechs. They are actually going through a spate of M&As over time. So how have the startup sector really taken in M&As? And of course, in terms of valuation, in terms of deal sizes and everything, of course, and how does it lead to more job creation and economic creation for us? Bharat, if you could please go first.
Yeah, sure. Happy to do this. So, I think what happens with a startup, if you think about it, is that there are venture capitalists sitting on the cap table and there are founders who are running the show. What happens is that the venture capitalists ultimately, if the company is just burning cash, can force a company to go into an M&A cycle because they believe it has a better home somewhere else. And that's really a VC-led exit that is taking place in situations where consolidation becomes the need of the hour because the company is not going to be the winner that takes it all in the relevant sector. And these companies have only digital assets or tech assets, or essentially soft assets. They don't have hard assets that can go through an IBC type resolution process where the cash flows are stable and it's a function of more financial mismanagement or imprudence that has led to an insolvency event. And so some of these situations also become tricky to resolve, because if you're trying, unless somebody is willing to just buy you for cash, it becomes difficult to resolve these situations. And the current regulatory framework also is quite challenging. And one has to come up with creative M&A solutions in terms of business transfers and so on and so forth to resolve these. I think we're seeing a fair bit of M&A activity here, which is of the nature of where you're trying to salvage whatever is left in the business, where the startup hasn't really become the winner in its sector, and people are looking at hiving off employees' intellectual property, and then finding a way to deal with the liabilities and wind up. Of course, well-capitalized startups, it's not all doom and gloom. I don't want to sound that way. Well, there are some very well-capitalized startups, and they are extremely hungry for growth and buying technologies, buying incumbents in their sectors, and growing hungrily with all the VC firepower that they have on their cap table. There are issues in terms of structuring these deals, and I'm sure we'll talk about them later in terms of using stock as acquisition currency, but let's discuss that later if we come to it.
Nandini, if you could please in.
So I think Bharat's covered the entire startup community and trends, and how they either kind of grow to become that unicorn and the leader, or have to kind of bow out and either do a forced sale to somebody else, absent insolvency. I think he covered that very well. Let me just focus more on the job creation side. I think for those who have ridden out this storm and emerged really strong with a strong cap table and the ability to raise further capital for growth, I think they have clearly added jobs. I mean, Walmart, Flipkart alone have, I think, added about 50,000 jobs, as Walmart has taken gradual stake in Flipkart over the years, including the recent one. Once an incumbent like that comes in and keeps growing, I think PE, which is a huge fuel for growth for any organization, requires, I think, talent. Growth goes hand in hand with talent, and therefore capital grows hand in hand. Not so much M&A as such, which are secondary deals, but primary transactions, which is fundraising via PE, fundraise via capital markets, and fundraise via debt raises, really create jobs. And I was going to kind of focus on that. Outside of just the tech sector, I think, again, large M&A mean large investments, future investments by the buyer. So whether it is an Adani in cement or the HDFC Bank merger, I think they have announced 10,000 crores of investment in technology and infrastructure. That is huge amount of job creation. Tata's, after acquiring Air India, have announced an order of nearly 450 new aircrafts. Every aircraft creates about between 500 and 700 new direct and indirect jobs. So just do the math, and that's if you add 400 aircraft, you have another 28 to 30,000 jobs being added by one incumbent alone. So I think M&A is a huge facilitator for growth and job creation.
Absolutely. How have regulations and government policies impacted the M&A landscape? Nandini, if you could please go first.
Yeah, I think let me stay more on the commercial side and maybe leave Bharat to cover off on regulation, though I could see a couple already kind of really making a change. I think the big one that we are seeing as a banker is government disinvestments and the entire will and desire to push through real privatization after many, many years and 5-year plans of largely, PSU to PSU consolidation. So, if the Air India transaction was about $2.4 billion, which they sold to Tata. Then they sold Neelachal Ispat to Tata Steel. And those were the two large first third-party recent transactions. There is a huge pipeline of disinvestments, which shows the palm and the cabinet's conviction of, not running, assets of which could be run better in the hands of private sector. Current ones which are large are IDBI Bank, Shipping Corporation. We're seeing Nagarnar Steel, which just got demerged from NMDC, the much awaited Concor and Rashtriya Ispat Nigam. So I think some of that is really policy driven. And I'm also hoping that, impending elections will not derail this process, and this momentum will continue through, post 2024 general elections. There have been some other things like the Competition Amendment Act, which was very critical. And we were talking about data and software and tech companies. I think some very significant amendments, and CCI has been pursuing, all even advisors like us to look under the hood to see how they could bring in large tech deals under CCI approvals, which otherwise had, thresholds for asset and turnover, but not. And now they've added a deal value threshold, which actually brings in all the asset light. As Bharat said, most of the tech companies are really asset light, sometimes even turnover light, but yet their valuations are underpinned by a massive number of subscribers or consumers, and CCI was literally just missing that. So I think that is going to change somewhat, or at least put more scrutiny on the kind of transactions and the scale of transactions that could be happening. FEMA, I think, and here maybe Bharat could clarify more, the Overseas Investment 2022 rules. We'll probably see, basis that, more financial services outbound. We'll see some interesting structures around, foreign family offices. Press Note 3 seems to be here for keeps, which limits investments from our neighboring countries. Was set up for a purpose. I think some of these I continue to see will have a reasonable effect on the M&A. And then I think a big one that we are waiting is really a regulation around FDI, whether some more sectors will kind of open up, insurance being one of them. And you keep hearing that it might go up to 100, some caps being completely removed. But I guess those we will wait to see what happens.
Yeah, I think Nandini's touched upon, the core areas really very well and summarized them quite exhaustively. I think I'll maybe look at, regulatory impact in terms of, deal structures and where things can improve fairly significantly, I think, through a few quick changes to really add rocket fuel to the M&A market. So take one in terms of getting financing. We still have very restrictive rules in terms of banks providing acquisition financing locally here in India. So you have to go to alternate providers of finance. There are some exceptions and limitations, but for very few sectors. So could there be some degree of liberalization there, particularly where you have well-capitalized issuers who have, meet some liquidity and solvency tests, who can then go and raise domestically more easily, at least in terms of loans. Of course, they can approach the local bond market, but, slightly different way of financing. I do think the opening up of the ODI route has resulted in people looking at creative structures in terms of using the ODI entity, which is backstopped by an Indian parent guarantee, to see if they can raise money offshore for in-country financing because of the liberalization in terms of the step-down subsidiary rule. And it's interesting to see whether some of those structures actually result in any actual deal activity. But that is a structural change that we're seeing people talk about. In terms of swaps, unfortunately, using stock as acquisition currency, as I mentioned earlier, that's still not reached sophistication that one would hope, because anywhere else in the world, if I swap shares for shares, I don't get taxed at the time of the swap. I get taxed when I convert those shares into liquidity so that I can actually pay my taxes. But in India, for some perverse reason, you swap shares for shares. You're a company in distress, another company is buying you. That company doesn't have an exit in place. It gives you shares in return for your shares, and you as the seller end up paying tax on that deal. That just seems like a really bad place to be, because where are you going to finance it? And then the structure that one has to come up with to make those deals happen get fairly convoluted. I think ESOP holders also have to suffer on account of similar taxation at the time of the actual exercise rather than exit. So I think these are some areas where regulatory intervention would be helpful, as would if the RBI allows the advent of convertible notes so that foreign investors can protect downside even coming in as an FDI investor. Today, that's only permissible as an FVCI. And a lot of people have actually, forgotten or not really relied upon the FPCI route to come in. So I think, in terms of actually making deals happen, price deals, price downside risk, some of these regulatory interventions could go a really long way, supplemented with, some of the frenzy that we're seeing in the sectors that we discussed earlier to supplement M&A activity.
Absolutely. Looking ahead, what do you anticipate for the futures of M&A and consolidation, and especially their role in driving economic growth? Bharat, if you could please go first.
Sure. I think, as an M&A lawyer, I think it's obviously, fairly significant, because what it ensures is that, there is value creation, both, sectorally, as well as in terms of, encouraging people to innovate, to come up with new technologies, new products, new ideas, new services, and have something to offer for either for an incumbent to go ahead and buy up, or just to take over the market. So I think in whichever market they're playing in. So I think M&A is the fact that you're not just building to hold and to hold in some flat future forever, which doesn't grow, and you have a very dull looking future. M&A activity and the fact that cash is available, buyers are available, makes it exciting to be an entrepreneur, to come up with a new idea, and to see whether you can be the winner in your sector or you flip it, and you become part of something larger and bigger. But it does create that traction. I think it does create excitement, given the number of engineers and talent that we have in India and the markets. I think it's it's a very exciting tool, and I think we're just seeing the beginning of M&A as an industry in India.
Nandini, if you could please come and weigh in.
Yeah, so I think great set of points in terms of crystal gazing. I think what I would like to add there is, I think I've been a banker for 30 years now, and I see literally different waves, sometimes even in, maybe a decade old pattern. So consolidation was and has been a, consistent theme for some of the larger groups here, looking to, do bigger things, consolidate balance sheets, have stronger balance sheets to raise further money, to do acquisitions, new greenfield activity. But at the same time, I think what the stock markets then do is kind of discount you if you're a pooled asset. So I'm beginning to see a series of spades of demergers where large diversified conglomerates are either selling businesses. We saw Shapoorji doing that. We're seeing Vedanta exiting their steel businesses. We're seeing Reliance kind of break it up and get the right valuations for retail, telecom, and their, original oil and gas business. We're seeing, again, Vedanta just announced their split. This was done, I had done that consolidation in 2012, 2013, and come 10 years down the line, you kind of doing something quite the opposite. And I think this will continue, because as corporates kind of their needs keep changing, the consolidation, demerger is going to keep happening in, waves. So I think that's one trend which is kind of more long-term. More recent trends, I think, will be driven by some of the economic outlook, both globally, and we are increasingly becoming, borderless. And so one is really ESG compliance. I think that's become a huge driver of both compliance, growth, responsibility, governance, and that is at one time an opportunity, and another place a cost for corporates that they cannot ignore. It's creating new opportunities. It may even probably make some industries a little bit redundant. So we're seeing the whole trend toward EV, green steel, circular economy. We're seeing, plastics will probably suffer at some point in time, as single-use plastic we've already seen banned. So with fundamental structural changes driven by government policy, I think you're going to see a lot of deal activity. We're seeing a lot of fundraisers by companies who are in, say, recycled plastic, recycled lead, recycled electronics or materials, steel, etc. Rising shareholder activism, I think that's another one that I see. We saw it in a really big way with Hindenburg kind of getting at Adani. I clearly stalled their M&A momentum and velocity, and made them think sharper about their strategy and their expansion and diversification. We're going to continue to see a lot more shareholder activism. I think last but not the least, we're all going to be waiting to see how the elections pan out, and therefore how markets react. Typically, the run up to it means, budgets full of SOPs for more targeted towards the individual voter and consumer, and perhaps some of the other initiatives could probably go on on the back burner. But I am an optimist always, and I've seen, despite government changes, many things continue to roll forward, and I'm hoping that there are no major changes or impact on the M&A scenario post elections.
Absolutely. Bharat, if we could have closing thoughts from you.
No, I would just echo what was said earlier by Nandini, that it's going to be. I think everybody's now going to be slightly cautious in terms of seeing the outcome of the election, but certainly macroeconomically, India is looking in good stead, and I think we look forward to what lies ahead.
Nandini, could I please have closing thoughts from you?
Yeah, I think I echo Bharat's sentiments. I think big year ahead of us in terms of elections, but the larger India story, how we've positioned ourselves geopolitically, vis-a-vis all, pretty much a lot of international relationships, whether it's vis-a-vis, Russia, Ukraine, or Canada. I think we're seeing a confidence that was hitherto not seen, and therefore that drives a lot of the confidence that inbound investors have in the economy, as also the growth and potential and the optimism of large domestic incumbents. So I'm very optimistic about India M&A going forward.
Thank you so much for your time, and I look forward to interacting with you soon again. Thank you.
Thank you.
Thank you so much.